My name is Eric Kuhonta. I'm the director of the Institute for the Study of International Development of ISID, and I'd like to welcome you to the McDonald Currie Lecture for 2022. The McDonald Currie Lecture is an endowed lecture in honor of George McDonald and George Currie, who were both graduates of McGill, and they were founders of the firm McDonald, Currie and Company that later became known as Cooper's Lybrand. The goal of the McDonald Currie Lecture is to advance discussion on at the intersection of international business and development. It seeks to bring to McGill leading figures in the public and the private sector who will address important questions that matter in today's contemporary setting. In the past, ISID, in collaboration with the Deopersad Faculty of Management, has held lectures on topics such as leading change from a global perspective, indigenous nations and the prospects for development, and entrepreneurialism's contributions to sustainable development. Our roundtable today is on an extremely important topic in contemporary international development, that is, development finance in the private sector, from safeguarding standards to sustainable investing. I very much hope you will enjoy the talks that will follow, and that you will also partake in the discussion and the Q&A that will follow from the set talks at the roundtable. Following the conclusion of the roundtable at 6 p.m., we have a wine and cheese reception, and invite all of you to join us for that and to meet with the speakers at the roundtable. I close by noting that McGill University is on land which has long served as a site of meeting and exchange amongst indigenous peoples, including the Haudenosaunee and the Anishinabeg nations. We acknowledge and thank the diverse indigenous peoples whose presence marks the territory on which peoples of the world unite and gather. I will now hand it over to Christian Novak, who is Professor of Practice at ISID. Professor Novak is very much involved in development finance and investment banking. He is the CEO of Delphus International and a professor here at ISID, and he will be the individual who will chair the roundtable and introduce the participants. Thank you.
Thank you, Eric. Thank you, everyone, for attending this roundtable. Thank you to the panelists. I'm certainly delighted to be here in this roundtable with very renowned practitioners in the space of development finance, specifically involved in financing the private sector. Like Eric mentioned, we're going to hopefully be done by 6 p.m., where we hope that everyone can stick around for a reception. The way we are going to go through this roundtable is my dear colleagues over here are going to go through presentations that might last about 13 minutes. After that, addressing a couple of questions that I have for them, and then we have a very nice and extensive period for Q&As for interaction with you. And after that, just finalizing with a few comments and heading off to continue the interaction with the panelists in the reception. So let me introduce you to the panelists, starting by the end of the table and approaching myself. Angel Bohorquez Colombo is a senior investment officer at FinDev Canada. Angel originates and structures debt and equity transactions throughout Latin America, the Caribbean, and Africa in sustainable infrastructure and in clean energy. Before joining FinDev Canada, Angel was an associate in the infrastructure investment team at CDPQ and previously at PSP Investment and at the Inter-American Development Bank. Angel holds an MBA from McGill University and a law degree and business degree from the University Pablo de Olavide. Thank you, Angel, for being here. Chitralekha is an advisor for environmental and social risks at FinDev Canada as well. Chitra works to identify, monitor, and mitigate non-financial risk throughout the lifetime of its investments. Before joining FinDev Canada, she was an environmental and social officer for IDB Invest, the private sector arm of the Inter-American Development Bank, and in previous capacity, she supported the public sector, also within IDB, at the IDB Climate Change and Sustainability Division in the Bahamas country office. She holds a master's degree in coastal engineering and management from the University of the West Indies. Thank you, Chitra, for being here as well. John Graham is a principal industry specialist with infrastructure investment and advisory teams of the International Finance Corporation. That's the private sector arm of the World Bank Group. He's based in Washington, D.C. Previously, John was Division Chief of Infrastructure at the Structural and Corporate Finance Department of the Inter-American Development Bank. John is also an adjunct faculty at the Walsh School of Foreign Service at Georgetown University, and he holds a bachelor's degree from the University of Illinois, Urbana-Champaign, and a master's degree from Georgetown University. Thank you, John. And so let me just brief you about something that would enter us into the presentation from our speakers today. So for the last 70 years, governments around the world have created development finance institutions. We also call them DFIs, as well as multilateral development banks. We call them MDBs, to promote economic growth and support social development, either through the public sector or the private sector. In this roundtable, we'll focus on the DFIs and MDBs. Remember, DFIs, Development Finance Institutions, MDB, Multilateral Development Banks, FinDev Canada, and the International Financial Corporation, IFC, where John works. They're both DFIs. They support the private sector. Now, they provide financing, environmental and social guidance, and technical assistance programs to small and middle-sized enterprises, as well as to private corporations that are not sufficiently serviced by the private banks or local capital markets. Now, we were wondering about the audience knowledge about this topic. So we were wondering if those that are familiar with the 2030 Agenda for Sustainable Development that establishes the Sustainable Development Goals are familiar with those topics. 2030 Agenda, fantastic, great, thank you. And then secondly, I made reference to the public sector and the private sector, particularly in relation to financing the public sector and the private sector. Those that are familiar with the difference between public and private sector? Good. Great. Well, that's fantastic. You know, so back in 2015, the UN in a UN meeting there was the approval of the 2030 Agenda for Sustainable Development. There are 17 Sustainable Development Goals. The hope is that we can achieve them all by 2030. Let's see. Financing the public sector, as you can imagine, is financing governments. Of course, we're in the context of financing for development, and financing the private sector is financing private sector projects, whether it's financing small and middle-sized enterprises, whether it's financing infrastructure projects, or anything else that relates to financing for development, the private sector indeed. Anyways, with that said, I cannot wait to hear the speakers today, and Mr. Graham is going to kick off with his intervention. Thank you.
Okay. Well, good afternoon, everybody. We good? Okay. Listen, my name is John Graham, and as Kristen mentioned, I'm with the International Finance Corporation, which is the private sector part of the World Bank Group, and I am based in Washington D.C., but I actually live here because my wife is actually part of FinDev Canada, and so I've spent a year here, and I suffered through the winter last year, so I'm feeling more at home now. It's so nice outside today. I'm just kind of keeping one eye on the calendar as we go forward. But listen, it's great to be here. This is a really complex topic that really isn't that complex. These are banks that have missions in mind, and they go out and try to do great things with money. And I think it's something that, with just a few minutes with us this afternoon, I think you can get the general gist of how these institutions work. And actually, I'll talk about this at the end of my bit, but we can also talk about it afterwards in the Q&A. It's a great place to have a career. And I think for all of you who are looking at kind of international development and you're talking about finance, and you're at a wonderful university that has global reach, these are great places to work, and we'll talk about that later on. We don't need to talk about career stuff right off the bat, but it's a great place to work. So we'll get there. So in terms of, okay, so what are these things? So what is development finance? And it's 4:30, and I teach at Georgetown, and our class usually starts at 4:30, and by 5:30 people start looking at their phones. So I'll try to keep this short and pretty simple. So So what is development finance? I mean, you guys all have bank accounts, and so you know what banks do, and they take deposits, and they turn around and lend money to entities to do this or that. The development finance and the development finance institutions are really banks that are set up to put money to work to do something that the owners feel very passionate about, or something that is a mission of some sort. And so we put here mission-driven finance. At the place that I work, at the World Bank in Washington, the motto, the mission statement of the World Bank is to end extreme poverty and to promote shared prosperity. Now, when you walk into the World Bank, it's this big glassy building on Pennsylvania Avenue in DC. This is on the wall when you walk in there. And so, you know, it's nice because you're going to spend a lot of time in your career. You spend 40, 50, 60, 70 hours a week in your job. It's kind of nice to go into a place where they really feel strongly about something that, you know, I can get behind something like that. And so when you look at the development finance institutions, they all have a goal in mind. And that goal can be, as I put in the slides here, it can be things like health, education, food security, infrastructure is what I do, manufacturing, financial inclusions. But it can also be things like small and medium enterprises. It can be the border crossings. It can be women. Just about any, I would say just about any topic or any issue that you really want to get behind, there is probably a financial institution that supports those types of things. And if you've got the skills, like the banking skills, the finance skills, the economics things that you can learn right here at McGill, for example, you can go to work at these places and really find yourself engaged in an issue that you care about, doing something technical that gets money to the right place in this particular situation. And this is really what the development finance institutions are, without getting into too much detail. So there's a couple of things. I put here policy goals and standard setting for our own operations and beyond. At the World Bank or the IFC, and I used to work at the Inter-American Development Bank as well with Christian, actually. One thing is what we do with our own money. And when we put money into projects, we care about where that money goes. We want to know about things like environmental things and social things and governance things, development impact. But there's also a role of the development finance institutions in showing the rest of the market. I don't want to say it's the right way to do things, but there's certainly a standard setting thing, like the Equator Principles. We'll talk about the Sustainable Development Goals today, kind of demonstrating that there's a better way to do things that not only the development banks, but Goldman Sachs or Scotia or you name the bank, JP Morgan, for example, there's standards that we get behind, and we kind of try to tug the market and get them to come along with those same standards. And so what you've seen over time, I remember when I first started working the environmental and social stuff, we would come in as the multilateral guys from IDB, from the Inter-American Development Bank, which is the DFI for Latin America. And we would bring these environmental and social specialists with us, and people would kind of roll their eyes and be like, oh God, here come the multilateral guys with their environmental and social stuff. But if you look at maybe the hottest sector of bond finance right now, it's ESG, environmental, social, and governance financing by purely private entities. And we're not anywhere near that stuff. So these issues have kind of been brought along by some of these development finance institutions, some of it with our own money, but some of it also by setting standards that the market can follow. So again, it's kind of it's a neat place to spend time. And I think when you see that impact getting outside of the building where you work, you know, it's nice. It's a nice part of what we do. So, and finally, there's different types of lending and investment programs, whether it's the IFC or it's FinDev Canada or it's the IDB or whatever. I kind of put the banks here on the slide. They all have different types of products. And so when you're taking your finance classes and you're hearing about debt and equity and venture capital, small and medium enterprise finance, most of these institutions have different flavors of those types of things. And so when you're thinking about this in your finance class, and I took a lot of finance and accounting at University of Illinois. It can be kind of dry, and I teach finance. But when you think about, you know what? I bet I could use this stuff to support women entrepreneurs, or to support environmental and social development, or to support better crossings of the border in difficult places. These are tools that you can really put to work to something that you really care about, and I think that's why all of you are probably in this room today. So, the alphabet soup, and I got to keep an eye on the clock. I could talk to you about this all day. The alphabet soup, look, I work in Washington, and everything has an acronym. So there's the ADB, and there's the IDB, and there's the EBRD, and there's the DFC, and the CIB, and the BNDS, and the blah, blah, blah. It's kind of overwhelming, but these are the development institutions, because the names are way too long to kind of talk about in normal speech. So there's this alphabet soup of banks, and some of them are listed here. Mine is the World Bank Group. FinDev Canada is up at the top, where Chitra and Angel work. But the development banks, I mean, the classic development banks are kind of the big ones, like the World Bank and the regional development banks. But really, you have multilaterals, you have bilaterals, which are country banks that just want to give to a certain issue in other countries. There's national development banks. For example, here in Canada, in Toronto, you have the Canadian Infrastructure Bank. But also on there's BNDS, which is the Brazilian Development Bank. The Brazilian Development Bank lends more money than the World Bank just in Brazil. So national governments have their own banks to do things for development. Usually they're in developing countries, but not necessarily. And then you get down to states and municipalities and even communities. There's community developments, and we don't really think about community development banking as kind of the DFIs, but that's really what it is. It's getting money and somebody putting money to work about something that you really care about, okay? So whether it's at the national level or the international level, like the World Bank, or if it's really down to just kind of your neighborhood where there's community banking to make sure that people have access to credit, again, it's putting money to work into something that you feel strongly about that usually has some sort of development goal. So collaboration and competition, there's all of these banks, and we're all out for kind of the general good of the public, and sometimes we partner with each other. Like sometimes the World Bank will partner with the IDB and the ADB or whatever it is. Sometimes but there is a market as well, and we compete, which I think is actually a good thing. There's a competition for these projects, like renewable energy. Renewable energy 10, 15 years ago was risky, and so we would all partner together and we would try to scratch together the money to do wind farms or solar projects. Well, now there's like a line out the door to finance these projects, and so there's competition. But what that does is it actually drives down the pricings, and those projects get better financial terms and conditions. And so the competition amongst these groups, as you'd think that we would all be on the same team, we are in the big picture. But the competition between these banks is actually a good thing too, because it gets better access to credit to some of these things that we care about. So the DFI is a career opportunity. I won't talk about that too much here, but I think because you're sitting here, look, this is a great place to have a career. I think we're going to talk about how we got here later in the conversation. But as students at a great university with international outlook and good skills base from the undergrad that you're getting, look, this stuff is not going to go away. Think about climate change, international development, think about the sustainable development goals. That stuff is going to be around longer than we are. So it's a great place to have a career, and I really think it's a growth business that a lot of you could really think about in terms of career development. So I'll kind of stop there. One last thing, and I'm probably getting up against my 13-minute limit. How are we doing?
2 minutes.
2 minutes? Okay. So very quickly, and Christine asked a minute ago who was familiar with kind of public sector versus private sector. I put old school because in the old days, kind of before I got into this business, development finance was really a lot of these institutions giving money to the government of Bolivia or to the government of Vietnam or to the government of Nigeria. And then the government would turn around and put that money to work. And they did a lot of really great things with that money, including infrastructure and health and education over time. But in the 90s, probably when a lot of you were either in diapers or not even around yet, the governments kind of hit the wall to some extent, and the number of things that they really do day in and day out kind of shrunk. Some of it was because of financial capacity, some of it was because of know-how, and the private sector really became a bigger part of the development finance world, and the types of things that were done, a lot more of it was done by maybe regulated and supervised by governments, but really carried out by the private sector. And I think that's why today we're really talking about private sector finance. And so and the second bullet here is expanding impact through engagement with the private sector. This is exactly what's happened. So the three of us really in our careers, rather than working with governments, now I work in infrastructure, so the government is always close by. And we work with those governments very closely, but the people we actually give money to are private companies that pay us back, or maybe they don't. So it's private sector credit risk. And so it's a very different ball game. It's very different than giving money to the government of Bolivia, to the government of Vietnam, or to the government of Nigeria. You're giving money to private companies and monitoring and evaluating them to make sure that the money that you give them does what you expect it to. And in the meantime, you get repaid as a lender, and the equity makes a return, okay? So when you're in your finance class and you're thinking about debt return and equity returns, when you start doing development things with the private sector, those things still have to hold true, and you have to make, the debt needs to get paid, the equity needs to make its hurdle rate, which you talk about in your classes, but you also want this development impact, this development outcome to happen as well, okay? So as you're going through your finance class, and again, they can get a bit dry, kind of start in the back of your mind thinking about how can these things be put to work to something that I care about, which again could be environmental and social stuff, can be the border, it can be women entrepreneurs, et cetera, et cetera. But those are the skills that have to take place, the things that have to take place. And just as a last thing, and I don't want, this isn't an advertisement for the World Bank Group, but I work at the World Bank Group at the IFC, which on the slide is the middle box, which is the dark box, which is the IFC. IFC is basically the investment banking part of the World Bank Group. But the other four parts of the institution, MIGA not so much, but you have the IBRD, which is the classic World Bank, which is giving money primarily to governments. You have IDA, which is giving money to the poorest countries. You have the IFC giving money to private sector entities. MIGA doing guarantees, which we don't need to bore you with today. And then ISID is really for the settlement of disputes. So within the World Bank Group, all of these things are different parts, and we work with each other, we sometimes compete with each other, we fight with each other, we have debates, but it's all in the same institution. So when you're thinking about the development finance world, it's a lot of different things, and anything from very public sector, governmental stuff, to really small venture capital type private sector things. And so anyway, I think in terms of the things that you're gonna learn in your finance classes, you can put it to work wherever you want in these institutions, and the private sector, I think, is where we focus, and I think that's what's going to be the rest of our presentation today. I'll stop there. I'll be ready for lots of good questions, and we can catch up later.
Great. Thank you so much, John.
Angel, right?
So now we'll have Angel present us his ideas about the space. It just stays in my mind, why do these organizations exist, And as we go forward, John already touched on that, but as we go forward, let's keep that in mind as we transmit that to the audience as well. Angel, all yours.
Thank you very much, Christian. It's a real pleasure to be here today. I'm Angel Bohorquez. As mentioned before, I work for FinDev Canada. FinDev Canada is a development finance institution founded by the Canadian government only 4 years ago. So basically half of the time we were during the pandemic. We have a very strong mandate to support the private sector development in Latin America, Caribbean, and Sub-Saharan Africa. And we have basically 3 development impact goals that we want to push in every transaction, every investments we do, which is women economic empowerment. We fight for gender equality in all the transactions we do in the regions we work on. Market development of job creation. We find extremely important actually to create good quality jobs in the countries we do investments. As well as climate action. As mentioned before, one of the guiding principles of development finance are the 17 SDGs that you can see in the screen. And we try, obviously, all together to make this happen by 2030. I think it's still a big challenge, and it's something we see as well. So it's private sector, we support companies, but with the idea that through private sector we can get to accomplish the sustainable development goals. This is like, and each transaction we do, each investment we do, obviously can be stronger in one or the other. And this is something that we find very exciting in the domain of development finance, is that how to make an impact, how to create development through agents that many times are local companies, many times are also maybe companies that they bring some technological edge to the countries where we support. But obviously the impacts have to happen in the local community. So looking at renewable energy projects in Sub-Saharan Africa, looking at transportation, electrification, transport in South America. This is something that you can see definitely is having a real impact in the local societies. Obviously, it's not free from dilemmas, from basically conundrums as well. It's a complex world, and definitely something we need to address as well and be cognizant. And you can see here, I try to bring. Oh, it's not. I try to bring some graph also where development finance is This is information from the OECD, and you can see definitely climate change is a big challenge today. Is one of the key pillars of development finance right now, together with the other goals that we mentioned before. And you can see how the development finance supporting climate objectives being obviously growing significantly. You can see here, for example, in Canada, the Canadian government has a very strong commitment to climate action, and this is coming not only through the traditional development grant and technical assistance that the government of Canada has been doing for the last decades, but also through an institution newly created like FinDev Canada. We are just here in Place Ville-Marie, and we pretty much, one of the reasons why we were here talking to Eric and Christian is to show what we do here in Montreal, in Canada, but to the world. And that's one of these discussions is extremely interesting for us, but also to let you know what we do, because I think in your studies and basically in your interest, knowing that there are institutions just in your city open to do good things in the world is, I think, extremely valuable. And as well, is a link as well to the topic where we work is in infrastructure and how sustainable infrastructure have a positive impact on climate change is also something key. We know nowadays, I think it's very important to understand, after the pandemic, the fiscal strength of government worldwide has been extremely weakened. We understand that definitely have to be an important role to play in the private sector. And we see also technological improvement that you can. I was like looking at transactions right now in renewable energy project. When we started doing renewable energy projects 10 years ago, there was always the argument of climate, which is key. But today, renewable energy, thanks to the improvement in technologies, made the cost of the electricity lower than the fossil fuels. So it's also about independence, energy independence, climate action, and support of local communities through these innovative technologies. Obviously, it doesn't come without controversies. As we know, the development, construction of building the panels are basically coming from 2 or 3 countries in the world, and definitely they are not free of issues that we need to be careful about. And finally, there's something I would like to obviously touch in with what I mentioned before, is sustainable infrastructure. Infrastructure today is about electrification of transport, it's about generation of electricity, it's about the green hydrogen that we're talking everywhere. So, oh, sorry. There you go. I think I moved in my computer or not. Thank you. And we see that's all interconnected. I think making a fairer world, a greener world, developing technologies locally, it can make what we feel it's like a world that is not only greener, but it's also more resilient to crisis. It's also more independent from local, from basically international influences. And you can see it I'm working, hopefully we can close the transaction very soon, which is a green energy in the Caribbean that gives basically cheaper and also cleaner electricity markets where, as of today, most of the generations be coming from dirty fossil fuels and also getting import and from outside. And also originating an industry locally. I see I'm originally from southern Spain. I could see you can see Southern Europe 20 years ago was basically pretty much pushing renewable energies. Now this technology is actually going everywhere in the world. We're looking at projects in Senegal, in the Dominican Republic, in Namibia. This is basically for us. But you can see that definitely there is a need and it's a solution for this problem. So now I pass it to my colleague Chitra. She's talking, I think it's very interesting segue to the standards that we actually follow.
Thanks, Angel, and thanks, John, for that lovely introduction. So my name is Chitra, so short for Chitralekha Deopersad. I also work at FinDev Canada, and it's a pleasure to be here with you all today to talk about these standards that we have employed in our development banks. So my role is an ENS officer with FinDev Canada, and I work with projects in Latin America and the Caribbean and Sub-Saharan Africa. So I think both John and Angel talked about the opportunities that exist with private sector financing. But I'm here to sort of talk about the risks as well that we have to look at from an E&S perspective. And we tend to try to look at this from an opportunity lens, in the sense that we try to help our clients meet the standards that we have to keep to minimize the impacts to environmental and social aspects in our communities. So with this slide, I wanted to just bring to the forefront what all of our development finance institutions try to achieve, which is sustainable development. And at the core of sustainable development is really three aspects. One is social, environmental, and the other is obviously a profit-based mechanism, because within development banks, we do have to lend loans to private sector entities, but as a part of that, we ensure that they meet from an acceptability standard a social aspect. So what does that mean? We ensure that the projects that we do or that we invest in, they bring some sort of value to the countries and the communities that we assist financing for. And then they also comply with, national laws, local laws, and also the standards that we hold there within DFIs. So we call this E&S within the DFI space. And I did have a video to show what that tends to look like, but it's not available at this point in time. But I do know that Christian will share it with the rest of the team at some point. So moving on to what these standards look like. Oh, thank you.
And we will share the slides.
And we will share the slides.
So they
yeah.
don't have to.
Yeah, so what these standards look like, these are what John mentioned, belong to the IFC. And this is part of the Equator principles that he mentioned. So the IFC has these 8 particular performance standards that we need to follow whenever we invest in a project. So the first is risk assessment and risk management. So we do ask our clients to be able to assess their availability to assess the sort of E&S risks that will be on a project. So I know Angel mentioned renewable energy. So those type of risks could be anything towards, environmental clearing or those things like that. You might have to engage with stakeholders on the field. So we have to assess clients based on their ability to identify that and also manage that. Then the second performance standard looks at labor and working conditions. So we look at what clients do in terms of their labor policies, how they assist their teams with human rights issues, and so on. We also look at resource efficiency and pollution prevention, community health, safety and security, land resettlement, of course, biodiversity, which is the big one, any potential impacts to indigenous people, and of course, cultural heritage. So these are the core 8 performance standards that we look at when we invest in any particular type of project. And the reason we do that is that because we invest in so many different types of countries, the regulatory requirements of each country varies. And so to be standardized across the board, based on that list that John shared, is that we need to be able to meet these high-level standards so that we don't cause any undue impacts to the environment or any additional impacts to the environment or the communities that are impacted by our projects. So just to mention, I think John mentioned that 70% of the world's leading investment banks, they all follow the Equator principles. And the Equator principles use these IFC performance standards. It's estimated to cover at least 90% of all global project financing, which is really good. Of course, it's meant for us to guard against any environmental and social risks and impacts, but it also gives us an allowance, a social license to operate in the countries that we serve. It also improves project performance as well because it helps our clients look at their resource efficiency. It helps them with their issues with anything that might be related to effluent discharge, emissions, and so on. And it helps them be a better client and also improves the way of life in the countries that we provide financing to. And then finally, I looked at climate resilience as a big one, and I think Angel also touched on that. So although climate resilience isn't a core aspect of the IFC performance standards, this is a very big growing field, and it's something that you might also be interested in being involved with, because climate resilience is a big aspect of DFI financing nowadays. There are very few projects that will not have or will not be influenced by the impacts of climate change. And we within DFIs try to look at ways that we can assist them with adaptation, for example, to things like sea level rise, hurricanes, and so on. But that comes as part of the package that we offer to the clients that we serve. So in a way, I think John touched on it, in a way, the way we differ from commercial banks is that we offer this added value that commercial banks typically would not be able to do. And we have a very closer relationship with the client to meet the needs that we see as beneficial to them and that they see as useful to them too, because any client could go to any commercial bank and get a loan. But when they come to a DFI, we have all of this extra added value that we help them meet, whether it's through the SDGs, whether it's through climate financing, or whether it's through environmental and social risk assessment. So I know I had another video as well, but we will share that. I wanted to touch on how it is we assist or how we can make resilient buildings, resilient to climate change. But you could take a look at that in the slides that we will share. So I think I'll stop there unless there was anything additional, any extra time we had. So thank you.
No, thank you, John, Angel, Chitra, for your interventions. Certainly very insightful, and thank you also for sharing the details of your experience as well. As I was taking notes on your excellent presentations, I just have a couple of questions, if you don't mind, before we open to the audience. I just want to be a bit selfish first. And as I said before, I've been reflecting, disattaching myself from what I know is the answer. But what is the reason that development financial institutions and multilateral development banks exist? They have been existing for about 60, 17 years, but there's some recently founded ones like FinDev Canada. But why do they exist? And this I connect with the discussion about the 2030 agenda and the hope that we can achieve at least much of the Sustainable Development Goals. And also as a finance person, and understanding there's about $4 trillion per annum that are required to hopefully achieve the 2030 agenda. Is there a connection between that financial gap with the existence of MDBs and DFIs as well, given the 2030 agenda? Are there any other reasons why DFIs should exist? How DFIs and MDBs can achieve can attain some accomplishments that can reduce at least that significant gap. Maybe John, Angel, I do have a question for Chitra too, but maybe the two of you can probably address this.
I'll start with this one. If you look at the order of magnitude of the gap that we have to deal with for development, but also for climate change and reaching the Sustainable Development Goals, there just isn't enough. There aren't enough projects. There isn't enough money. There isn't enough government capacity out there, and so I think these banks, which we talk about, the MDBs, the DFIs, talking about the alphabet soup, our role has really changed over time. I think in the old days we kind of funded things and we gave our own money to these projects. And then I think over time we kind of became like a standard setter. And then now I think if you look at how dire the climate situation is and the sustainable infrastructure gap, which is where I work, and you could have the same discussion about health or education or women's empowerment, other issues, again, thinking about these things that you care about. One thing is the money, but the other thing is capacity. And so I think the multilaterals today have kind of and you saw how complicated that World Bank slide was. There's like 5 different parts. And if I showed you the organizational chart of the IFC, it looks like a microchip, which is brutal. But We need to put money in the right place, but we also need to bring money along. We need to mobilize. We need to convince other financial sources that these are the not only profitable things to do, but also things that are good for the environment, good for climate change, et cetera, et cetera. But the other thing we need to do is, and I think we could do a lot more of, is advisory, because if you talk to people in the market, what there are not enough of is projects, okay? There's actually quite a lot of money out there. If you look at the money, just look at the Canadian pension funds, just to start with. I mean, there's piles of money available for well-structured, we talk about bankable and investable projects. And it's kind of looking for a home. But the problem is we can't produce these projects fast enough, whether it's water treatment stuff or whether it's renewable energy or, I don't know, you name it. There is money out there that's willing to invest in these projects, but we cannot find enough projects that are acceptable to these institutions to get things done. So the multilaterals, in addition to investing in projects, I think we need to play a bigger role at creating the right conditions for others to invest. Because really, the World Bank is a big institution, but it's not that big if you look at the total financial markets. If you look at New York or Toronto, those markets dwarf what's available from the DFI communities. And so we need to be really clever and think about what we can do with limited resources and try to bring along as much as we can to these ends. And the nice thing is, first with the Equator Principles, which was probably 10 or 15 years ago, the Sustainable Development Goals, if you can always kind of keep that in the back of your mind, the whole global financial community has gotten behind this particular set of objectives. Now, there's 17 of them, and under each of the 17, there's 17. But the Sustainable Development Goal framework is something that the whole market has basically said, okay, that's what we have to go after. And so that is a really important thing that's happened in the last 5 years. It's not really a funding thing, but it's an agreement amongst countries, amongst private sector, amongst national NGOs, for example, that is what we're going to care about. And if we don't focus on these things, we're going to have real problems. We have real problems today. You can just watch the news, look at Pakistan, look at Florida. I mean, climate change is here, and the problems that we have are already in front of us. And so getting behind the Sustainable Development Goals and kind of being thematic and specific about what we're going to do with our money, not only with our funding, but also, again, bringing other people along and creating those projects to begin with. Again, I think that is what the multilaterals should be doing. I think it's doing more with less. Sometimes when we do it well, it's amazing. We could always do better. There's no question about that. I'll stop there and I'll open up for questions later. Angel, your perspective on the same.
No, definitely. I think what you mentioned is key as well. We play a role getting into sectors that they may be perceived as riskier by commercial investors, and we can play a role in transitioning those sectors into basically more traditional financing. As well, I think as an institution that care about standards and social standards and environmental standards, as well, is to basically support companies and that they're already doing a great job in those standards. I have an idea I have in mind a Peruvian company that we support. That basically one of the leaders is one of the, I think, the strongest woman leaders in Latin America, and she's being like an example of basically woman empowerment in a company that is extremely sophisticated in the agribusiness, and by supporting this company with not only our financing but also basically our name, we promote not only the practice but also basically setting them as an example. So I think that the role of DFIs and NDVs and development finance can be also financial, but as mentioned before, non-financial, to give an example and to support leaders in the local communities.
Very good. No, thank you for those opinions and points of view. I certainly agree that there should be maybe a push for market creation of projects from NDVs, beyond just the simplest approach to the use of capital on working towards pushing more the envelope. I hear the message here. now, Chitra, when I back a few years ago, when I joined the Inter-American Development Bank in the specific affiliate for the private sector, one of my responsibilities was to build a team that you actually ended up working after I left, and this is the team that, as Chitra was describing, where she actually now works in a similar, identical team at FinDev Canada, looks at environmental and social aspects of the project, and you gave excellent examples. But when I joined, I didn't know much about what this team was doing, and I was absolutely inspired by what this group of professionals were doing. That the team evolved significantly. I did like the approach that was taken on approaching this from a risk management perspective, and I think it's the same approach that FinDev Canada has. Is there anything you can describe, because what I realized as we were developing this team, and I hear Chitra in the way that he presents what she does, that it's not ticking the boxes, it's about finding solutions. It's about identifying how, because in every of these projects, Chitra, you would tell me further, there is a risk that is being taken. There's a developmental aspect that is being addressed, but in that way, there's some risks that are being taken, that some things can go wrong. But all this is done in a very careful and responsible way, very exemplary, also as compared with my prior investment banking experience. Chitra, I don't know if you want to expand a bit more into that aspect of risk management and why that is the approach that DFIs have.
Sure, and I think also it's an evolving approach within DFIs, because I think at the time that you were at IDB and the time that I was at IDB, things had evolved so significantly. I think the team I was on, we started off with, I think, 20 people, and then when I left, it was about 30 people, which shows how big this space is in the environmental and social realm. So it's not just ENS, it's climate change, it's gender issues, it's human rights issues as well. And there's a wide, it's a wide scope for any student who's looking to be involved in this space, to be involved in, because there is a whole climate unit now at IDB. There is a evolving unit at FinDev Canada. There is a new gender unit as well. So it's a space that needs people, especially young people who are very passionate about the environment and passionate about helping people, to be able to fill that. Because I think one of the things, I think we all discussed how passionate we feel about development finance and how it can serve different countries and communities. But what we really need is specialized assistance. So you can have somebody who is, who is an anthropologist who likes to study cultures, or somebody who likes to study birds and bats, or somebody who likes to study, flora and fauna. It's a big scope there, and I think risk management sometimes gets put into a small box where we assume it's a box ticking exercise, because every project needs to have an environmental and social assessment. But then when you look deeper, each project has its own unique requirements. So, for example, and I think since we're talking about infrastructure, if you think about wind farms, not solar wind farms, there are so many things from an ENS perspective that you would have to look at. You would have to look at where the land comes from. Are there any indigenous communities in that location? So you would need to have somebody who has that specialized skill. You need to see somebody who has some skill in avifauna, for example, because solar farms do have some impacts to birds and bats, especially. You might have to find somebody who knows about cultural heritage in the area too. When you do construction, you will see, if the client or if there are any artifacts in that area that need to be identified and need to be protected. So it's such a very big scope. I don't think I have even the ability to describe how much scope there is for individuals who are interested in development finance to be able to contribute to this space, because I think, and maybe I'm judging a bit too harshly here, but I think we have more people in the finance space than we have in the ENS space. And that's where we need people in that space, because it's a very important aspect of what we do. I think sustainability needs persons who could identify risks, for sure, but who have the communication skills and the patience and the optimism required to assist clients with meeting our requirements, and sometimes even going beyond that, because the IFC performance standards that I mentioned to you, I think they're about a decade old now, more or less. They're about a decade old now. And so many things have come to the forefront, such as labor and working conditions, forced labor, child labor. I touched on gender, climate. There are so many different avenues for young people to be involved in. So I really encourage you to join if you want, if you're interested in working in the DFI space, to learn more about it, because it's really a big evolving field, and risk is not just looking at the bad things on a project, it's looking at the opportunities that we have to offer to the clients who really significantly need the money for the projects that they want to do, but don't know how to go about meeting the requirements that we have within the DFI space. Because at the end of the day, we still need to have a standardized approach with how we address risks within DFIs. And that's where we also have to build additional skills, such as communication skills, problem-solving skills, critical thinking skills too. So it's really an exciting field to be in.
Thank you, Chitra. Oh, well, so we are now entering into a period of questions and answers from the speakers. We're going to have a microphone here in the middle of the room that you're going to need to take off. Actually, Kai is going to bring it to you. We're recording this event, so it's important that you do hold the microphone, if you don't mind introducing yourself first. So just raising the hand would get Kai all the way to you to give you the microphone.
Hi there, my name is Soraya Juris. I'm a master's student in the Department of Geography, and I also specialize in development. Sorry, I'm a little nervous now. So in the past, I know DFIs have had a history of providing loans to countries that have no sustainable or realistic way of paying back those loans sometimes. So I'm just wondering how the World Bank might consider grant giving, particularly in a loss and damages context, to maybe small island nation states, just considering how climate change is really going to be intensifying so much in the coming years, and the likelihood of them to be able to pay back even low interest loans might be quite low. Thank you. And thank you for being here.
Okay, so can you hear me? So we're going to start with an easy questions. Look, the one thing we talk about throughout this session is sustainability. There's environmental sustainability, there's social sustainability, there's financial sustainability, and it all has to fit together. What we talk about in our work is generally, we talk about projects being durable, again, because I'm in the IFC, so we're talking about private sector. We're giving money to private entities, and we expect to get repaid if we're debt, or we expect to get our return if we're equity, right? Because we're trying to make the private sector work to where the machine of the finance part works on a private sector level, but the developmental stuff that we really care about also gets done at the same time. That's kind of the game at the IFC. At the World Bank, if you take the broader view, and the World Bank is the part of my institution that actually gives money directly to countries, not to a company or to a toll road or to a renewable energy project. But like we would actually give money to, I don't know, the government of Brazil, or we would give money to an island state. I don't know, name an island state. And Trinidad. Thank you. So what you have to make sure is that when you're doing these great things, that you don't go too far and you try to create conditions that are not sustainable over time. And I think some of the things that we're looking at, especially with island states, and with new actors in the financial system as well. I mean, you can think about some of the Chinese development banks and others that have come against there's this whole discussion about debt trap and all these other things. It's a really good question, and so there needs to be a blend of things that you can really reasonably afford, and then outcomes that you need to have that really need to be supported by grants. Now, a grant, to everybody here, a grant is money that is put to work, but you don't expect to get it back, Okay, it's money that you put to a certain use, but you're not saying like, hey, you're going to owe me 6, 8, 10% a year, or I expect to make 15 or 20% back on the equity. You're basically saying, I care about what I'm going to do here. It's more like aid. And governments do this. Like the government of Canada is wonderful about supporting different types of these things with targeted aid towards things. You can, again, name your island state. But the World Bank does also. Again, the World Bank is this kind of council of governments that put this money in one place, and then we turn around and give those things away. The grants has to be one part of the question. I think there's concessional finance, which is very low interest loans, which in that slide that I had earlier was the IDA portion of the World Bank, not to get too nerdy. And then there's things that can get done kind of on a commercial basis with like debt and equity and things that can have rates of return. But you have to have that blend of things because really, especially looking at climate and the conditions that the kind of fossil burning economies have produced over the last 50 to 100 years, some of these island states just don't have the capacity to deal with some of the impacts. And so the grant part and just kind of forgiveness of loans that already exist, or the granting of new finance that does not have an interest rate on it or a return expectation, I mean, I think it's going to have to be part of that. And I think the G7, the G20 countries, I think they realize that. But the question is, how do you do it in a way that's the most efficient, that's not corrupt, and that gets to the right place? And I think that's where, again, the multilaterals, and I was talking about this earlier, maybe even more so than the money that we actually provide is the frameworks and the standard settings and maybe the institutional capacity, if we talk about this, like making the government stronger and more transparent about handling those funds. I actually think that's where the World Bank can actually have a really nice footprint without actually using our own money, but using our brains and trying to help those entities be ready to accept the funds and put it to good use. But your question is a great one because I think if we're really going to get at climate change impacts over time, the private sector stuff is I would say maybe I don't want to call it the icing on the cake. We're going to have the markets doing the right types of things, et cetera, et cetera. But there's going to have to be government loans and government financing, and there's going to have to be lots of grants and forgiveness as well. Otherwise, we're just too far out there right now with climate change stuff if we don't do some of those types of things. So awesome question.
I like that question coming from a small island developing state myself.
Okay, this is a big room. Don't be afraid.
I think the gentleman was, weren't you? Okay, so there you go.
Hello, I'm Anor. I'm a first-year ISD student, or IDS student, and I have a couple of questions. My first question is, do you think that the standards that DFIs have limit potential development that could have occurred even if, say, a project didn't meet all of its standards? And if yes, why do DFIs prioritize no development over some development that could have occurred by financing this project?
Wow, good question.
Excellent question.
That's all yours, man.
Angel, you want to take?
Go for it.
No, definitely. I think that's an excellent question, and it's something obviously there is no an easy answer to that. So you mentioned development without standards or no development with the standards, right? That's the dilemma that you have in mind. I think it's kind of linked to the question previously asked about sustainability in the long term. I think sometimes when you try to cut corners and basically go through some processes that they may save some time and basically financial means in the short term, but maybe you don't see that sustainable in the long run. I think social standards are key. You don't want to create a fair and fair society where the values of key minorities are taken into account, where women economic empowerment is not there. Definitely you can build a factory very quickly, but definitely you will be creating some imbalances in society that in the long run maybe will be even worse for development. So I think standards are key for long-term sustainable development. And taking into account those as being, I think, part of the experience that the development finance world has been going through for the last 5 decades is if you don't have sustainable development, the development be lasting for a very short time. So I don't know if answering the question.
It's a really good question because I'm thinking about like mining projects. Like in my team at the IFC, mining is one of the subsectors. There's energy and transportation and water and sanitation, and mining is one of those things. And mining is tough from a sustainability perspective. And so a lot of times we'll look at things and say, well, we've got this kind of menu of standards that you have to comply with, but if you don't tick the box on one of them, we don't like to go to the board and say, hey, we're going to apply by our standards except that one. Nobody likes to do that. And so sometimes we will usually actually walk away from those projects. And so sometimes in the hallways, you're with your friends and you're like, wouldn't it be better if we were in there to kind of like help things along, even if it's not perfect? And it's really a judgment call. I mean, it's really not, if it was easy, if it was black and white, the computer would replace all of us. But it's really a judgment call. And you need to look at that with your specialists, with the finance people, with the government, and say, hey, look, we really care about this menu of things. And sometimes you have to walk away from projects, and we walk away a lot. I think the IFC is actually very conservative with our standards. We kind of have the performance standards of the IFC, and the Equator Principles really kind of came from the IFC, and so we're very religious about these things, almost sometimes to the point of being difficult or complicated, or choose your adjective. But it's a judgment call, and I think that's one of the things that makes development finance fascinating, is that it's not that easy, and making those judgment calls is really tough. And a sector like mining, I'm trying to think of others, education and health, I mean, things that, water, there's things that are really difficult from a development perspective, and you have to really take your briefcase full of your policies and standards from a place like Washington or from Montreal, for example, and try to find the right balance of being practical but also defending what you really care about. And it's something that we deal with. That's you have that question at like 10:30 on Tuesday morning. It's really, okay, are we going to do this or not? And so, but that's why you need great people in the business, is people that have the mind of kind of thinking about, what do we really care about here? What's the big picture? But can we really defend this from a technical perspective? So, wonderful question, Chitra. You're in the middle of this as well.
Yeah, I mean, I think it boils down to feasibility too, and I think that's what John is discussing. One of the aspects that we still have to look at from at least an ENS perspective is the feasibility of a project. So not just the fact that a client comes to us for a loan to develop something. We have to take a look at the feasibility of it, the viability of it. That's where we have the ENS aspect that I described before, and it really feeds into that sustainability component, because at the end of the day, it doesn't make sense to invest in something that's not going to be, worth it, 10, 50 years down the line. And it's a very technical thing too. So he mentioned specialists are required for that. So it's needed, for us to have like engineers, for those people who have that special skill set to identify that for us, to help us within DFI's focus on that. I hope that answered your question.
Awesome question.
Indeed.
Great question.
Hello, thanks very much. I am very much at the other end of the spectrum of this audience. I'm a retired economist, but I would like to ask a couple of questions about Finance Development Canada. And mainly, Mr. Colombo said it's only been going for 4 years. I'd like to know a little bit more about what its resources are and what it brings to the table, what a relatively small organization like that is bringing to the table.
No, definitely, that's a great question, because it's true, we come into a group of basically institutions that's been around for 70 years. So we are 4 years old institution. What is the new thing we're bringing to the table? Canada has been a strong supporter of development through technical assistance grants, through Global First Canada, SIDA in the past. I think it was a long debate of basically creating an institution supporting private sector. So in terms of resources, it's extremely small compared to the IFC group, so IFC World Bank group with the other DFIs. But what we want, and basically the idea is to bring agility, I think, to be filling the gaps that maybe other bigger institutions don't get to see because maybe the projects are too small. I like also takeovers from our Dutch counterparty, FMO, the way they approach are more entrepreneurial, to try to support projects that they may be harder to bring through the financing. But it's an extremely good question. I think John's wife maybe has more answers for that question. But on the ground, the way we see and the way we've seen in the last 4 years is we can get into development projects or companies that they may be too small for other bigger institutions. And this is what we try to bring as well, with the Canadian flavor and basically the knowledge of the continent we may bring from here.
Yeah, my wife is the CEO of FinDev Canada, so I have to be very careful in how I answer this question. I think in the development world, I think you need like aircraft carriers and you need speedboats, and you need big institutions that do big things, and then you need lots of specialization around other issues. And I think what FinDev Canada does is, again, you mentioned specifically a Canadian feel to this. I think it's the renewables, it's gender, and I think and the climate stuff, which everybody's focused on. But I think the agility is something that you get from the smaller institution, that they can do things a lot faster, whereas IFC and the World Bank, we have lots of procedures that can take a really long time. It's a huge impact when we get it right, but again, we need lots of partners, and I think it's really fantastic that the Canadians have come forward with their own DFI to kind of do some of these things with a very special twist that I think is Canadian, which I don't think you see from other institutions. And so we are partnering very actively with FinDev, and we hope that, and I think for all of you as well, it's a great place to think about in terms of career growth.
Any other questions?
Hi, my name's Isaac. I'm a third year at McGill. I'm a poli-sci student and econ and IDS as minor. So I'm not as on the ball with everything that comes to like technical financial stuff. So I was mostly wondering, like, are there mechanisms in place that encourage like local solutions from people in the private sector that might not be as aware of like the technical financial mechanisms involved in all this investing, and so that might not have like the expertise to frame a project as like financially viable. So I'm thinking about like people in the informal sector or things like that. And I know you talked about how different DFIs have like different scales, and I think that might also be applicable to like that question. But do like, because they still seem like very global and very encompassing, like on the international scale. So I was wondering if like local solutions are encouraged in some way.
Maybe I could try to answer that, and then maybe John and Angel could assist me with it. So we do offer, most DFIs offer some sort of technical assistance or technical advisory to assist clients with those needs. And these are, and I think what you're trying to ask is, how it is from a local perspective, we add that value. So yes, it would be through those particular grants that were mentioned before, where it's actually designed to suit the project or the need of the client, sometimes as an extra added value to the projects that we're trying to complete. So yes, we have these fixed standards, environmental and social and so on. Yes, we have our credit standards, we have our legal standards, but then there are times where we see that there is an additional need that the client cannot meet to meet our requirements, so that they could at least be able to viably have the loan, and this is where technical assistance can support them. So once the project has some sort of impact value, that we assess as a DFI, then we discuss with the client what that sort of technical assistance is required. And most DFIs have a unit that's geared towards technical assistance. This is where you sit with the client and you decide, where are the gaps or what are the gaps that need to be filled. And sometimes we do have to interact with local entities to do that. usually consultants, so that they could fit and meet that need, because obviously we are operating in different countries and we need to suit a specific local context. So it's not going to just be, you know, me sitting here in Montreal saying, okay, well, you need to do this a specific way according to Canadian guidelines. It's me working with a technical assistance person and with the client to see, okay, this is the financing that you want. This is the team that we have. Let's see how we can meet in the middle to be able to meet that particular need from a local perspective. And again, as I keep mentioning, there's a lot of scope in this field. So if you are also interested in working in that field, it's very broad. We take in people from like financial backgrounds, you know, social backgrounds, environmental backgrounds. It's not just focused on, you know, just financial aspects. The DFI space is very broad when it comes to trying to apply those technical assistance support to our clients. So I don't know if Angel or John wants to give any examples or expand on that.
Look, Isaac, it's a good question because again, if you're in Bolivia, for example, and you're a garment producer, your business is probably very informal and local, and you're not going to kind of get your briefcase and go to, you know, Pennsylvania Avenue in Washington D.C. and ring the doorbell of the World Bank and ask for help. So I think in the things that we mentioned earlier, I think that's the right slide, the alphabet soup. There's kind of a cascade from like these big global institutions down to local institutions, which you see kind of in the second group here, where, you know, there's bilateral, there's national, there's state and municipalities, and there's even communities, because some of those audiences are really better served by local solutions. Because again, you certainly can't be one size fits all, and you certainly can't do everything from Montreal and Washington, for example, in my case. So what we actually try to do, in addition to technical assistance, is also working through local financial institutions and training them to find those opportunities, and so then they can go expand the impact locally. Because again, if we try to do everything from downtown DC, it's really just not that efficient. And so we have to find a way to partner and get the local expertise and the local feel for the business, and then get those local banks maybe to provide that type of support to things. So it's a really good question. And I think when you're thinking about your careers as well, getting out into the field and being close to those projects or those companies or those governments is really the way to do things. It's great to be in DC in the headquarters or in Montreal, for example, but getting out and feeling the nitty gritty and really talking to people doing the business is really the right way to provide finance to them as well. Because you won't believe how much you learn from folks. And there's a bit of, can I say this? I was going to say we're recording this, but we are recording this. There's a bit of arrogance in some of these institutions, and we always need to remember that when you go into the field and you're talking to those clients, they are just as sophisticated as you are, and they know things that you don't, and you can learn so much if you can just have an open mind when you talk to those clients. And actually, as a banker, you're better for them, and they're better for you if the understanding is more. But having that local feel, Isaac, that is something that we really struggle against, and really something that could make you travel kind of 365 days a year if you really were going to get it right. But great question.
Hi, my name is Lhasa. I'm a first year here in the Institute of International Development, and my question was regarding FinDev Canada. Since you guys just started, you mentioned you were 4 years old. I understand that as development banks, you guys basically invest in countries or the private sector and then expect a return, and that's basically your business model. But how did you start? Like, what was the initial investment, or where did the money come from for that first investment?
No, definitely. That's a good question you ask yourself. Where's the funding coming? Basically, FinDev Canada was created by the Canadian government. Basically, it was public money that basically was there was a way the capitalization of the entity. We are a subsidiary of Export Development Canada, but indirectly, obviously, the behind is the Canadian government. So this is basically public funding, and the way the Canadian government sees FinDev Canada is one of the tools in the toolkit of development that they have actually to support international development policy. So definitely, the same thing for NDVs. NDVs are supported by the governments that they are shareholders. So that's the multilateral development banks. It's called multilateral because there are many countries that they support through the capitalization of the institution. But yeah, the question is public funded institution.
Hi, I'm Mia, and I'm a first-year student in international development. So you mentioned that DFIs mostly work with private sectors and private investors, but I was wondering if you sometimes work with global institutions like the UN or even local institutions, and if so, how does your work differ compared to working with the private sector?
All right. The DFIs, there are just like the public sector part of the institutions, and then there's kind of the private sector part of the institution. So don't get confused. Now, we are private sector folks, but in the grand scheme of things, there's actually a lot of kind of government to government, like MDB, like DFI to government financing as well. So let's just keep that in mind, that is still a big part of the business that we have not focused on today, because that's not what we do day in and day out. But it's a big part of the business. In each of our institutions, there are departments or teams that work on partnerships, and so we will do things with at the World Bank, for example. We'll do things with the UN, or we'll do things with like the World Health Organizations, especially. But I think it's down in the weeds of, for example, the health and education folks would deal with the international organizations that deal with health and education, or I would assume for like women entrepreneurs, women's empowerment, there are organizations where there would be partnerships with those types of organizations, because really we need to draw upon all these different expertise, and in the global market there are a lot of institutions that cover very specific issues, and so if you can bring them into the design of some of the programs, especially when you're doing public sector things or grants, which was brought up earlier about the island states. Drawing on that expertise is really important. I've spent a lot of my career doing Latin America stuff, so like I would reach out to the Organization of American States, or I have counterparts at WOLA is the Washington office on Latin America. I know the people at Georgetown and the Latin American Affairs departments. So you kind of, in this career, you kind of develop within the institution, but then you kind of have your lateral contacts with people that work on similar issues. And when you can really draw them in, and like you said, when you can work with other organizations that work on a specific issue, that's actually really valuable. And so when you're thinking about what you want to do with your career, your ability to kind of bring in contacts from different places, and it's not a cheesy way talking about networking and all that stuff, which you hear all the time. But having these kind of lateral networks of like-minded people that care about the things that you care about, those are really important people to be able to bring in. And when you have an opportunity, you can say, hey, I've got this health issue, this health investment project, would you like to partner with us? And then you can put those institutions together and do something that's quite cool. So I don't know if you guys have bumped into this.
I think there is usually in DFI is a blended finance team. And again, that falls on the advisory. Unfortunately, we don't have anybody here from our advisory teams to speak on that, but usually we do partner with non-DFIs when we have to look for blended finance opportunities. So they speak to those grants that John would have mentioned. So in those teams, it's joint grant funding. I'm not sure if the UN is involved in that, but I do know that other different types of entities that are not DFIs are involved in that blended finance scheme, and together they come together to make unique projects to assist clients with. But that's a good question that you asked, so thank you.
But these organizations are complicated as well. So if you get too many cooks in the kitchen, sometimes it can just take too long, because we all have our policy stuff that you kind of bring your policy stuff into your discussions. And so if you have like 3 or 4 of these institutions in an operation, sometimes it's if you have too much alphabet soup, it can be slow and not agile enough, which we talked about with FinDev, for example. So it's this is where the judgment part comes up, and from a career perspective, understanding kind of how to nuance some of this stuff, and when you bring in those big players, and when you might just say, I'm going to keep it simple here. So, good questions.
Hello, my name is Tanguy, and I'm a third-year student in international development. I work with the Montreal Social Value Fund, which is Quebec's first student-led impact investing fund. And I have a question about your investment processes. When you do consider potential investments, do you start with an impact assessment? And if that is the case, when do you take into consideration financial aspects?
And it's really good to hear that there is an impact investing group within Quebec. So we also have an impact investing team, and most DFIs have that. So that's a good start if you're interested in joining a DFI. So yes, so from maybe I could just describe quickly how the process cycle goes when we do some sort of development financing. So first there is a client engagement stage that somebody like Angel would be involved in. And then as part of that client engagement, we do have to do some level of due diligence that is needed from all different aspects. So it's not just from ENS, it's from legal, it's from credit. Sometimes it's from advisory, whether they qualify for that. And that sort of allows us to do that particular assessment. And throughout that assessment stage, which can be time consuming based on the type of client and the location, where the project is, then we decide to invest in it from a financial perspective. So sometimes it could be a very lengthy process. This could be between a couple of months, maybe to even years, depending on the type of project it is, the level of complexity, the amount of time that needs to be spent on it, the data that needs to be collected, and so on. At what stage of ESIA, for example, a project might be in. All of these things need to be taken into consideration, and I think this is where maybe we differ from other commercial banks, because we do a lengthy ESDD from time to time, depending on the type of project. So this is where we have that challenge where we need to provide the client with some sort of financial need that they have, but then at the same time we have to do a thorough due diligence. So I would say at the end of that due diligence is when we actually say, okay, we will close this loan with this entity, but based on the findings of that process. So it happens at the end of that.
We have time for maybe one more question, possibly two.
My name is Angelique, and I'm a first-year student. And I was just wondering, is it difficult to choose who gets the money if you're looking at two different sort of areas that you want to invest in? Is it difficult to choose who gets it? And then does the fact that whether they can pay back the money, does that have any influence over your decision? Yeah.
I can take the question. No, thanks a lot. I definitely, in terms of, and that's one of the questions we get sometimes, is how do you choose between projects or investment? I think it definitely is a question of alignment with our goals in terms of development impact as well. And this is something in terms of basically geography that we cover. In terms as well of the exposure we may have in the specific countries. I think in countries that we got a heavy exposure, we try to diversify and support other countries as well, just to have basically a little bit of balance. And also in terms of internal capacity as well. It's sometimes we would like to support many projects, but internally we don't have the capacity, the people to process all the projects that come to us. So I have to say that obviously the development impact assessment and the financial sustainability are key in our judgment. But to be very frank, you have a good project that comes, and then a much better project comes later, but the teams is already working on this project, and the internal capacity is not there, so maybe we have to pass. So I think there's also a reality of in this kind of institution who comes first and how they manage to have access to the institution and the channels. And this is a question of basically alignment with the timing, with the capacity, and with the goals. Obviously, we would love to do one of the things we're having right now is exactly capacity. We have a very good capitalization level. We have a very high and ambitious goals, but we need the people to go and meet the clients, process the transactions, get the approvals, managing basically the assets and the relationship. So that's a key aspect to take into account. But the two projects come together, and one is better than the other. Definitely, the one that is better will be selected. But normally, it's very rare that you have two projects at the same time with these kind of conditions.
But remember, the private sector. We're all in the private sector parts of these institutions. We're not here to lose money. I mean, the game, the challenge is to have debt get repaid, have the equity make a reasonable return, and also have the impact that you want. And that's the government has to get a good deal out of it. The local community has to get a good deal. The user has to get a good deal out of it. So when you're talking about the private sector parts of these institutions, and we had a question here about public and private. The private institutions are set up with the idea that you can do things that are profitable and sensible from a banking perspective, but that also bring this stuff that you care about. So if something is going to lose money, that's not our business.
And maybe I could add to that again. It touches on that due diligence process I mentioned. I mean, if it's not viable from a due diligence perspective, it's a no-go. It's not something that we can invest in.
Okay, we have one more question over here. Thank you.
So this is sort of an abstract question, but I'd like to ask it anyway. How is it that banks such as the World Bank and DFIs promote development, which is sort of a selfless act, you can say, but there are also competitive markets which follow the theory of self-interest and incentives?
Wow. You want that one? Wow. We should probably have a drink if we're going to do this one. The self-interested part, again, you need that. I think you need, we have to be self-interested. I think the governments have to be self-interested. I think the people that use the projects have to be I don't think the self-interest part is a problem necessarily. I think, and a lot of you will study negotiations and things like this as well. The trick is, maybe a while ago, negotiation styles were really about kind of like tactics and getting your way, and it was kind of the zero-sum game where you're trying to kind of get one up on the other person. And I think especially in things that are complex like this, where you have stakeholders and you have governments and you have investors, and it's super complicated. And sometimes you really literally on a piece of paper you will write out all the different people that are sitting at the table, because everybody has to do well for a project to be successful, okay? Because for example, if the lenders don't get repaid, they'll call defaults and they'll collapse the deal. If the equity sponsors don't do well, the owners of the project, if they're not making a rate of return, they'll sell it or they'll go do something else. If the local community is getting harmed, or if you're doing something that's not good for the environment or for a climate change impact, that doesn't work either. And so when you're setting up a project, I think that the idea that you need to have in mind is durability. And in order for something to be durable, everybody needs to do well. Now, if an investor is making like 50%, making some outrageous return, we've had projects in developing countries where European sponsors, for example, were in a local community and just making money hand over fist because the tariffs were too high. That doesn't work either, because eventually there's going to be elections, and then they're going to come after you and renegotiate your contract. So again, I think part of the due diligence process, and we talk about kind of the analysis that you do before you put money into something, is making sure that you understand all of the stakeholders, and making sure that nobody's kind of getting hosed, because if somebody really loses, it's not that difficult to cause problems. Think about social media and all the things, and think how fast information can get around. If there's a group that is really not happy with what's going on, whether it's a social thing or an environmental thing or a climate thing or even a financial thing for the government, that doesn't work. So again, this kind of, it's not abstract at all what you're asking about, but understanding the interests of all the people that are at the table, and understanding that it's not just the private sector folks. There's a whole bunch of people that are impacted by this business. bringing all of those interests into the discussion and making sure that it's equitable for everybody. It's not self-interest in a weird way. It's just making sure that there's a fairness aspect here. And again, I think that's part of what we have to do as professionals. So go ahead.
No, we're getting to the end. I really encourage, that all of you, including yourself, approach the panelists. I thank you so much for excellent presentations. I thank you also very much for outstanding questions. I have felt like answering some of those. It's not my role today. At McGill's ISID, we are all professor of practice, always available, as they are as well, to address any questions you might have about the space. In our website, you can also find some policy briefs. I focus on development financing. 2 of those policy briefs are in our website, and in 2 weeks' time, I'm going to be publishing with another think tank in the UK a paper on DFIs as well. So please take a look at those, and we look forward to interacting further in the reception. So thank you so much, and please accompany me with a big applause for everyone.